There we go. Good morning, everybody. This is Dennis Wilmer with the Active Trend Traders. I am finally back to our home base in sunny California, the once great state of California, staying with my son, daughter-in-law, and grandkids. My wife and I have not been getting much sleep here the last couple of days simply because we have a 15-month-old grandson who is teething. And he's got like 5 or 6 teeth coming in all at the same time, and so he's not sleeping well at night, and boy can that boy cry. But let's get back down to the market. All the materials we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. And if Michael was here, here would be basically his disclaimer. So the Active Trend Trading System we like to provide to our premium members and early warning alert members and all members who have joined the Active Trend Trading System training. And each Wednesday night we except when I am gone on a cross-country trip across the United States, but I am back now, and so the schedule through the rest of the year should be fine. For every Wednesday evening, except perhaps when we do fly back to Hawaii. But this past Wednesday night, we started the Active Trend Trading Rule Review, got really good comments back from everybody who attended that. I think we're basically taking what we've learned, making sure that we're applying the rules to them, and I want everybody, and my desire is that every member be prepared for that potential upswing that we tend to see in the October, November, December time frame towards the end of the year. So this is where our training is going to be going. We'll do part 2 this coming Wednesday night, and if you can't catch it live, you can always catch the video. Before we move on to into the rest of the review, what I do want to do is I had a great email from somebody, and I encourage you to, even if you're not a member, but you just attend these Friday webinars, if there's ever a stock you want me to take a look at, please just shoot me an email. But I got a really great email earlier today, and it was about this stock, MIDD, which is Midley Corp. This stock was on the IBD 50 list for several weeks, but slowly lost its way off the IBD 50 list. The member who emailed about this one basically indicated that he got into the trade here on 9/1, down here at about 20 as it bounced off the 20-day moving average. Great entry for a potential move back up. It had come down here, found support from this past swing low, and so all appeared to be working very well. The only issue is okay, what happens if it doesn't work? Well, I wanted to just take a real quick look at some of the warning signs that were in place actually before entering the trade here on 9/1. Again, great entry, but very quickly after the trade happened, we get a move up, and it stalls out right at the 8-day moving average. Now, if you're using a moving average to basically generate a trade off of, that's great. However, if you're using the 20 instead of the 8, as soon as you get a close back below, if you're an end-of-day trader, as soon as you get a close back below the 20 in this case, if that was your trigger, then that's your initial sign to say, hey, this trade is not working out, therefore I want to close it. And so you got to close out there for a small percentage loss. And but what was going on with this stock? If you always look at both the daily and the weeklies, because there was a huge clue right here on the weekly chart where after earnings it had popped up really strong, but then sellers came into place and pushed this down, thus leaving this very long wick for us to have to deal with. And that's telling us that, perhaps sellers have come back into play. A couple of other things, excuse me, that we can look at is we had a breakout. We had a breakout at approximately the 127.17 area based on this candlestick right here. And so while yes, it's a great level of support, you don't want to give it much leeway to the downside if in fact the stock doesn't do what we expect it to do. And sure enough, over the next week or so, and especially this week, it just turned and ran. So this was Monday, no, this was Friday, Tuesday, Wednesday, Thursday, Friday. And so the idea place would have just been able to jump out at the end of that day at about, where would you be? 27.05-ish to close on the close below. Now what happens if it would have flip-flopped and went right back up? Well, you can always get back into the stock at this time. But this big clue here after earnings, the big sell-off, that was telling us that the sellers were gathering. And so to be aware of that. Also taking a look over here, we see that last week we had some pretty good negative divergence here on the true strength indicator and also negative divergence here on the momentum indicator. And as the member wrote in his email, said, hey, I can see that the TSI had continued to fall or was pointing down. And that was kind of like the other clue to take in consideration is once you fall below the zero line in either the TSI and or the momentum, that's a good indication that you're going to, until you see some reversal signs, that's going to move back, continue to the downside in a downtrend. Now the question is, what happens if you didn't get out of it on these other clues? What do you do now? I would definitely, it appears as if price action today is trying to put in a lower low, but is attempting to make this perhaps a swing low. And so you may get a rebound back up into the 8 and the 20-day moving average. And so one could plan to exit there. Or if we get a close back up above the 50, that might also mean that it is going to maintain, and it's just going to be a simple bounce off the 50. So would I add to a position there? I don't like to average down, but I can see the logic if somebody wants to average down into that, where if we reclaim and get back up above the 50, take that as a bounce above the 50, but on those shares you want to make sure give it 10 to 50 cents below this low here would be our stop loss, and or the 4 to 5%. So I just want to present that today as just kind of a little refresher and an assessment of this particular stock, and we'll get back into our remaining presentation. I hope you find that beneficial, and it's also nice to be back working off two computer screens. We'll come back to SPX in a little bit. Okay, so highlights for the week. Up until today, I was basically, when I wrote this about 9 o'clock this morning, I was going, okay, the market has been over the last several weeks very dull and listless. Tight trading ranges, few directional clues for both the S&P and the NASDAQ. So we take a look at the chart, we will see that that is no longer the case. Secondly, the Russell. The Russell has a tendency, it had been rising faster than the other indexes, but it also has the capability of falling faster. So we take a look at the charts on that to see what's going on. Well, what's causing the consternation in the market today? Well, the first thing is a lot of the Fed presidents got out today and they were talking about, yeah, they see no reason why it's not a great time to raise interest rates. And so my question when I first posed it, first looking at this morning, I said, well, does it really matter? Because it seems like the market has taken in stride everything that the Fed has done. However, that first little hint that they're serious about potentially raising rates, this coming, well, on the 20th and 21st, apparently the market did take it seriously. Now, will it do just kind of a flash crash like it did at Brexit and move back up after finding a proper level of support? We'll have to wait and see on that one. Secondly, the U.S. market continues to be the only game in town. Things in the foreign central banks are continuing to invest in the stock market. And then the question, have the excesses been worked off? And this is if the stocks would have just continued to move in a sideways motion. As you know, on my update last night, I talked specifically about that. It appeared as if things were going to continue to move in a sideways manner. However, that's how things can change so quickly from day to day. Get rid of that. There we go, moving along. Let's see. So the percentage of stocks above their 20-day moving average, I have modified this particular chart a little bit. One, I've taken out the lines and replaced put back the candlesticks on the percentage of stocks above their 20-day moving average. As you can see, it fell out of bed with the market this morning. And I also, by doing that, it gives us a better gauge of the range, the daily range of the individual candles and individual price action, daily price action on the spiders, which is the stand-in for the S&P in this case. And as we can see, the spiders have dropped this morning, gap down, and they are back into back into this lower range that it held almost the complete month of July going into August, and it rebounded up and is stopping and pulling back currently. The the percentage of stocks above their 20-day average have also dropped significantly today. For Mike and I, we of course are looking for when we get this retracement back down here into these areas, because that's when we get our triggers for the early warning alerts, at least the initial triggers for them. And there's some other proprietary information that we do use. I'm liking the action on the market. We had wanted to have a healthier pullback than what we've had, simply for nothing more than a potential setup going into the what tends to be a seasonal rally somewhere between October and December at the end of the year, where the market tends to move a lot. Those of you who have tuned in and also looked at the training videos on the website on seasonality, that was a real eye-opening training session, because it did speak specifically to, do the indexes move in a seasonal method? Yes. Do individual stocks, do individual industries move in a seasonal type of motion? The answer to all of those is yes. Now we just have to time ourselves and get ready for those proper seasonal. Okay, on the percentage of stocks above their 200-day moving averages, again, this is a monthly chart. And Eric, I think the contrast on this, going to a shorter time frame, going to only 50, well, on both a shorter time frame on the daily and the week on the monthly, provides us a much better view of what's going on here. So what is going on here? Well, we made a high about 220. Price action had been running between about 214 to 215 up to 220. Been operating that range for the last last month or so. It had moved out of this lower range where it was at from about 203, 204 up to about 212, and it had slingshotted on higher there. We've highlighted this line in here, which was a negative divergence type line, and it appears as if the individual stocks above their 200-day moving average have reached a limit and may be pulling back. Again, this particularly, these long-range projections for the bigger moves on the market become very interesting when they are lingering down here below the 30 level. And you know, if you want to go back and double check what happened back in 2008, end of 2008, 2009, into the end of 2011, and when these, you know, even back into 2002, mid part of 2002, when they got to these extremes, went on for a pretty nice rally from there. So since Mike is not with us today, I don't see Mike's join us. Nope, he's probably out walking his dog. So we're going to go to the charts here shortly. Just one of the key things to look at here with the sell-off that's going on today, the Dow has now slipped below its high from its all-time high, and the S&P has dropped a little bit, and then in NASDAQ also just barely holding on to that all-time high on both the NASDAQ and the NASDAQ Composite. The Russell never did make it. It got to about 2% of its all-time high and then rolled over. So let's take a look at the individual indexes. There we go. To see what we can look at for, you know, the remainder of going into September. Now, as we talked previously, we've talked a little bit about how September tends to be a weak month in the marketplace for all the indexes. And initially with this range-bound price action since the beginning of, well, actually it started way back here mid part of July, then bounced up to a slightly higher range. Well, it's broken out from that. It was covered by the 2193 level down to the 2160 level. We have now broken down below that. We will wait to see how we close the day, because we are, you know, we have also now dropped the 50-day moving average, and we'll see if that sets us up for a you know, healthy correction going into the end of the year. As you'll look over here on the weekly chart, though, we are, as long as this uptrend line stays in effect and is not broken, then we can anticipate maybe perhaps a bounce off of this down about the 2120 level. As we can see, the price action on the momentum, or the momentum's action, has stayed below this line here. Has stayed below this, well, there we go. Has stayed below this line and is negative divergent. We got a little bit of negative divergence here on the true strength indicator on a weekly basis, and now it's, you know, it is now running down. But we'll see. We'll see if it runs on down towards the zero line, or will it basically stop, you know, just above the zero line and then do a rebound. One of the things I wanted to throw on here, just for we go back to our low from June 27th, go up and let's do a fib retracement up to the highs that were approximately there. And as you can see, we've actually now broken through the 23.6 retracement. And if it closes below the 23.6 retracement, that improves the odds that we're going to go all the way back down to the 38. And at this particular point, we do not know when or where the institutions are going to step in and basically say, okay, and stop giving up ground so that we can get a potential good bounce. Now, I find this interesting that over the next few weeks and days and weeks, that I like this spot, and I'll just draw it here. I like that spot there where we get a convergence of both the 38.2 retracement and the uptrending trend line. And so that is approximately at 2116, which also happens to correspond with a support zone between 2121 and these past highs over here, where that will constitute a strong support zone for a potential bounce in the future. At this point, how do we want to trade this going into next week? Well, we're just about at the breakout line of 2134, which was the highs from last year, and so we broke, you know, it's right now appearing to be providing support. So next week I will take any on this large sell-off candle. I will take anywhere from about the halfway point up to the 50-day moving average as a potential rebound zone prior to it continuing on down. So that may happen like intraday, but we just want to be looking for that because at this point we have no reversal candle. On the weekly chart, this move is even stronger than it appears on the daily chart because look at it, it's wiped out basically. This bearish engulfing has wiped out the price action from 1, 2, 3, 4, 5, 6, 7 weeks, and is closing in very quickly on potentially wiping that out also. And it appears as if we are getting our acceleration to the downside, which is what we were looking for to begin with. NASDAQ. Now before we go to the NASDAQ, one of the things I wanted to show is that as you can see here, with the S&P, we hadn't, you know, with the S&P we'd already broken the 23.6 retracement. On the NASDAQ, the 50 is still holding up, and we're still above the 23.6 retracement. Again, large weekly, you know, sell-off. Looks like it may close below the 8-week moving average, which tends to improve the probability of it going down and retesting the next one if it closes where it's at. Towards the end of the day, if we get a rebound and we move halfway up this candle where the price action, you know, closes in the upper third or upper third of the this large candle, that will tell us that this is a very strong support level, and we can actually plan some trades off of that back to the upside. Right now, that is not the case. What I wanted to do, just really quick, I want to jump over here to, is this it? Yeah, it is. Okay. I want to go back to the SPX just to take a look at this also from a monthly perspective. I realize the month isn't over, it's not even quite halfway over. But you can see, here's the weekly, here's the monthly, and as you can see as we blow this up, we are getting some, I hate to call it positive, but positive down traction on the market where it could go all the way to this moving average, which is about the, but right at about 2100. So we've got some levels lining up about that 2100 level. That could provide us some good levels of support for a potential bounce, and that would be a good, a really good retracement down into the fib box, but where we could expect a potential turnaround and rally going into the October and November and December time frame. Okay, last one, Russell. As we said, when Russell gets going, it really accelerates. Russell had been stronger than the other two indices. Therefore, we're getting, it is still above its 23.6 and the 50-day moving average. Again, if this large candle remains intact for the rest of the week, then look for anything bouncing back up to about the 1240 level to plan something else to the downside, because it may pop up to there and then come back to retest at 23.6 level. And as you can see, we're staying right above the 8-week moving average. However, like the other indexes, it appears to be that we're getting some good turnover here on the momentum and the TSI indicator. And somebody mentioned this the other day, that if you connect the peaks on your TSI indicators, that's what I like about, well, both the momentum and the TSI. You can connect the peaks, and if the price action up here moves this back up into this resistance area, that's a time to start going, okay, this could potentially give you a higher probability for a downside trade. And as you see what we have going on here, we've got a little triangle going on. If we break down, then, potential bounce off the 0 line, but it would continue our price action moving down. Let me go here. As you can see, and it's interesting how that works out, where the midsection of a candle oftentimes, not all the times, is a good level of resistance. And you can see that daily open, our weekly open last week is basically right in the midsection of that candle, which is right about there. And so I would say that that is our resistance zone for right now, and that's where I would shift to play my trades against. Okay, that's all I've got on the Russell. Any questions on the indexes? Where do your TSI 883 settings come from? Rick, the TSI settings of 883 basically comes from our own back testing, and some people use a 14 on their TSI. I prefer, because I use the 8-day moving average, I also use the 8-period moving average, or 8-period on the TSI. It helps things line up a little bit better for me. So that's where they came from. Trial and error and a lot of experimentation. And so, yeah, every stock program will have a specific set. Merck mentions that the stock chart has a default of 25, 13, and 7. Every stock or charting program and or application will have a stock default that it sets to. And the thing is, you just have to make sure, is that going to work for you? Okay, let's go back over here. Okay, moving along. So path of least resistance. It now appears as the path of least resistance, in fact, for the interim may in fact be down. And again, oftentimes the month of September is a pretty significant down day. And so and we'll see if that in fact does happen. We initially were going with the sideways move, but that, at this point isn't happening. We have to remember that this initial midterm downtrend or path of least resistance is in the context and the recognition that we are, and the indexes are still in, an uptrend. So what we'd be looking for is, if we drop straight away to levels of support and all that type of stuff, we would look at pulling off the that they could go into a bounce mode and be bouncing back up. And so under the guise of the longer term uptrend, we would looking at any pullbacks for potential positions to get into an upside trade. David asked if we're going to do any SPY premium selling today. David, probably not. With the large sell-off today, I would like to see that settle out going into next week, because if we can get a bounce back up in the midsection of today's large candle, that would give us the opportunity to move into a better position at the first part of next week. And because right now on neither the TSI, correction, on the spiders and or Tesla, really with a large sell-off today, not the best time to be selling premium, because I don't want to sell sell any puts on Tesla until it shows us that it's going to bounce back up to the upside. And since it has dropped considerably today, I don't want to necessarily be selling any calls, because it's not the most opportune times to do that. But we will jump on it first thing next week on any kind of a rebound. Thank you, great question. All right. So here's where we're sitting for this week. Closed out last month very nicely. Most of you are aware that we also closed out one half of the Tesla position for its 100% gain. I'll cover that in shortly. This week we have basically just done the premium, selling the premium on both Tesla and the SPYs, and all of those trades are now closed and worked out very nicely, going into the end of the week. Had closed off last week with the premium moving up, closing the gap a little bit. Let's see if we can close the gap some additional. The distance from here up to here is about $4,500, and so if we have a month equal to last month, we should get back on the equity curve. That will result in a 40% gain for the year. And then here's the strategies, how they break down. We're still down a little bit in strategy 1. Strategy 2 is up nicely. Strategy 3 includes everything, spiders and Tesla. And so our CUM's at about 25.5 for the year. And here is that closed Tesla trade. We got into that first two leaps options on Tesla. They were the 2017 leaps back on September of last year. And over that time period, we averaged about 330 a month, with 330 a week, hit 1386 per month. And between what we had collected, the 15,000, and the residual value of the leaps that were still in there, we were able to close that out last Friday. And the total gain was, we paid for the initial investment of $9,010, and we gained an additional $9,000 on top of that. So we closed that out for the 100% gain. What I'm noticing about and those of you tracking the SPY trade, is that the SPY, because of the low volatility we've had this year, we may only make about 50% on that for the year, but that's closing it out in January of 2017. But I'm not going to sneeze at a 50% gain. So future presentations, we will be at the Masonic in San Jose tomorrow at 9 o'clock in the morning. So if you're in the Bay Area, please come by and see us for the monthly BAM meeting. And then next Wednesday night, we'll go Active Trend Trading Rules Part 2. And again, if you have not seen Active Trend Trading Rules Part 1, it is posted to the website. So as a reminder, the Active Trend Trading System, our motto is we want to clarify, simplify, and multiply. Was able to meet with Mike Traeger while I was out driving around the countryside about a week and a half ago back in Dallas, Texas, and we talked specifically about how things are going, what any modifications we need to make. And so we're in the process of going into that, just some slight tweaks. And so, yes, David asked if the BAM presentations are recorded, and the answer to that is yes, for all BAM members who are up to date on their monthly dues. So Pillar 1, what to trade. top quality IBD stocks and index ETFs. When to enter, we provide the entry action point. I'm going forward through the rest of the year, we are going to be doing a lot more target shooting and with conditional orders, especially to help the strategy one catch up with the others. And so be standing by for that. When to exit, what strategy we're going to use, and then what we are expecting to happen. So I'm a firm believer that a person needs a good, strong system, and then once you get and are familiar and intimately familiar with the system, how it works, then you start attaching your individual strategies that you're going to use. And this is how ours is made up, and we've picked 3 strategies to keep it simple and manageable. And one can focus on any of the 3, as you make up how you want your trading capital to work. So Bob Bowden asked, how do I get directions for the BAM meeting? Bob, you can go to the BAM website, and it is at San Jose Masonic Temple is where the meeting is. I would come by and pick you up, but you know where I am right now. Not as convenient as being back in Pleasanton. So that's all I have for today, guys. I am ready to look at some stocks. I would like to flash some stocks up for you if you're willing to take a couple of minutes, and I can go through my thought pattern on what I'm looking at. So one of the ones I'm looking at is, again, this has been on past IBD 50 list, and this is CBM. CBM is looking very interesting for a couple of reasons. It looks like it has come in and put in a bottom. Of course, this could just be a retracement back up to the 20-day moving average. It's going to roll over from here. But I like the volume profile here. As it was building back up, we finally got some volume back above 50%. And so it looks like it, and then when I look over here on a excuse me, weekly chart, if I take my fibs and take a real quick look at the weekly chart just to get an idea from this move up to that high move there, we have gotten down into the fib box at just below the 50% retracement, and now it appears as if it is rebounding and starting to push back up. And I look at that as being a fairly healthy. We also have the TSI on a weekly basis and the momentum starting to roll back up. And so I don't know if CBM is back on the list or not, Rick. But I will look at, I keep the running list, which has about 220 stocks on it now, all the stocks that have been on the IBD 50 for the year. And as I roll through those and look at the individual stocks, I do that basically once a week or once every 2 weeks, just to make sure, see how things are set up on a weekly basis, because oftentimes when a stock falls off the list, it goes into a pretty good plunge. However, it doesn't mean necessarily that they're a bad stock, because they're still good growth stocks, but then I'll just keep my eye on them to see, if it looks like they're going to turn around. Was it DDD, DDD is a perfect example. A few years ago, it started off the year at number 1. I think it was 2013. Started off the year as number 1, fell out of grace, but around April, it started putting in a really, really nice bottoming base. And if somebody had been watching that, they could have picked it up off the 200-day moving average as it broke through, and it was off to the races. And so, okay, that's one that I'm looking at. Another that I'm looking at, now this is for not for the timid. Nugget. You might go, why in the world are you looking at Nugget, Dennis? Well, one of the reasons I'm looking at Nugget is it puts in pretty good patterns. But secondly is gold after September, gold tends to rally into October, November timeframe. And if you take a look at what gold, what Nugget does, yes, it's a 3-time ETF of the miners. And it can, like I said, it is wet and wild. It can hammer you going down if you are long, but if you plan your trades around where it's bouncing off its moving averages or the Keltner or the, well, here's the Keltner on this one, it's way out here, or the moving average envelope, you can tend to do pretty good with it. But what I'm looking at for this to rebound, picking off this bounce off the 50-day moving average here, back up to its high, or even just back up to its Keltner channel, off the 50 back to the Keltner was a 43% move. So I'm not interested in trying to get all of that move, but certainly a piece of it. When it pulled back into the moving averages here and then rebounded, it got back up to the high, and that was about a 14% move. And so we're not going to be staying in this trade, any trades with. And so very observant, good job, Tracy. Yes, it is coming back to trace, to test the hammer that is in place from last week. And so again, this will be a seasonality type trade, where if we would have jumped on, we traded GLD with options of seasonality from about right here, 620, and as you can see, let me get this up. There we go. The seasonality trade on this would have worked out really good, about 70%. So within just a couple of weeks. And so I'm not chasing it. I'm waiting for the setups. But yeah, that's very observant that if we do get a move back up from here, and we can almost use a small body on the last week's hammer to plan a trade around. So in other words, if it jumps back above approximately 2180, or if we get down here and retest at the tail at 18, that would be a great time to jump in. I'm also looking at replacing the Tesla leaps that we just closed, looking out to 2018 to use Nugget as a replacement for that. I've done the math on it, and it shows to meet a 100% return during that time frame to January 2018. We require that we pull in about 40 to 50 cents per week. At least that's the initial analysis. So okay, I'll come back to those. Gino, I want to, let's see. Somebody also was looking to trade. Oil tends to fall apart after the Labor Day weekend. Here's a couple of ETFs. This is the Ultra Crude ETF. This is to trade oil to the upside, and then its counterpart is SCO to trade it to the downside. So in other words, if oil goes down from here, as it tends to do after the Labor Day weekend, this is another one of those stocks that you might want to be taking, or ETFs you might want to be taking a look at. So that was an answer to one of the members that was asking about how to trade the pullback in oil. How are we doing for time here? Okay, doing fine. So we've got, Gino's got ICIA. Gino had actually made it to one of my one of my lists that I really, really like. I liked the stock. Let's see what it does here. Right now, it looks like it's in the mood to drop, but we've got some very well-defined levels of support down here at about 100. I wouldn't necessarily want to buy it on this candle here. We'd want to see it do some consolidation. But looking down here at the tails on the candles for this week, we're at about 103. Tails from last week about 101. So that's where that would become. So that's where this would become interesting to me, to be able to jump in and also hopefully get a bounce back up on the momentum and the true strength indicator, which is trying to pull back in. A lot of times, Rick mentions that that there's no options on ACIA. That happens quite often on a newer issue. They don't come right out of the blocks with options you can buy on it. And so there are, if you're looking for other stocks in this venue that do have options, take a look at FN. This was highlighted last night on, these are high-speed internet providers, I believe. And as you can see, it's got a big bounce after earnings today. And so it is hanging up here. It broke out past its past level of resistance at the 2336 level. And so that's another one. And some of you guys are already on top of this. LITE in the same ballpark. Again, good looking little stock. And OCLR, which also looks like it wants to do some pullbacks. And then the long time, I remember trading Sienna back in 1998, I think is, and so it's also looking fairly good. It had just broken back out on a weekly basis, did a pullback. It does fairly aggressive pullbacks, and so I would wait for it to overshoot the moving averages and then pop back up through the moving averages. And so let's see what else we got. Gino, Baba. The Chinese internet stocks have been, hanging in there and performing really, really well lately. As we can see, it is time for a pullback in Baba. See how far it had gotten away from the moving averages, and so it appears to be reverting back to the mean. I would draw a line in the sand right here at this level, at the 94, 95 level, and then also down here at the 86 level, where that's a good potential area for the institutions to step back in and say, okay, we're ready to start buying again. We've taken our profits off the table, but yeah, keep a good eye on this. And we'll see, what area it's going to basically, the institutions will step back in and say, hey, we're ready to buy again. What else we got? Downside. Liken cyber to the downside now that it's broken through on increasing volume, the 50-day moving average. And OPK. Bob, OPK, it is, I'd have to run the stock checkup on it. I know nothing about this, this particular stock. Yeah. It appears as if it's trying to make a comeback. You had a big significant sell-off over here. and it's working its way up this way. One thing I do see that it does have going for it that you can kind of pay attention to is you've got a nice little symmetric triangle going on from here to here, but as long as it's working inside that triangle, it's in no man's land. I mean, you may get a nice little bounce and all that kind of stuff, and so you may try to trade it off the bounce, but as you move closer to the end of the triangle, you'd like to see it make a healthy move when it gets to within a third of the end of the triangle, and this looks like it's just continuing to move into a squeeze right now. Now, is it going to break one way or the other? Yes, it is. And so that may be where you want to plan any trades on this one. But for right now, again, without running a stock checkup on it, would not be of interest to me. Okay, let's see. And so Barbara asked, well, yes, Barbara, we're going to be sending out the invites to the BAM meeting later this evening, and then again first thing tomorrow morning well, when I say first thing, I send out the last invite about 6 a.m. The morning of the BAM meeting. So any other stocks, guys? Okay. One of the stocks that came to mind, with a healthy pullback that the markets are in the process of doing, what we want to be looking at is looking for are the stocks that seem to be holding up better. This is one of those. As you can see, it has not moved. As a matter of fact, it came down, hit off of its 8-day moving average today, and has rebounded a little bit. It does have resistance up here at 61. This is Shutterstock. But it's made a nice little big cup from here to here, and we may be going into building a handle. AZPN, thanks Eric. And so AZPN, again, it's right up against past resistance. It has broken above this resistance here from this long-term IBD-like double bottom, so it has broken out from that. Where to from here? It's got earnings, or it had earnings, so it got a good upshot on earnings, but the earnings were not strong enough to push it past these this old resistance level. So if you are interested in this one, we got some good buying, above average buying. You're going to be looking, you're going to want to look for the bounces off of established level of support, Eric. So, okay. So, well, I hope that, getting the information, me sharing some additional stocks that I'm looking at with you. Let's take a real quick look, because we do trade Tesla a lot. Okay, Tesla is, I have put the fib retracement has been on for a long time, from down at the past lows up to the highs earlier in the year, and it has been banging around. It has been banging around here, in the fib retracement box for a while. If we drop the 1990 or the 190 level, there is a bit of support down here at 187, but if we do drop that, then look for a continued plunge down to 170 and potential of a complete 100% retracement. Things are not looking good for Tesla right now from both a cash flow perspective, and it's everybody's kind of wondering, will Elon Musk be able to talk the price action back up, the value back into the company. Not saying it's a bad company. I mean, I love the products that they're putting out and that type of thing. But, taking on Solar City and trying to just stand, I mean, right now the institutions in the market did not like them doing that. And so what do we have going on? We've got a series of lower highs, lower lows, and so even if we slip just back down where to this downtrending channel, we'd be back down at about 170. So, okay, pool. Pool Corp. Really nice sell-off. I mean, if you're going strictly, what I find interesting about this, Eric, is that, yeah, you get your initial sell-off going on up here. It drops the ledge at 100, and then has fallen nicely down to the 100-day moving average. Will it bounce there? You know, and now this is the kind of stock that I haven't been in a real, you know, I wouldn't want to be basically taking a bounce necessarily off the 100-day moving average. I would wait for it to do something constructive over here before I start, until I start, you know, before I be interested in it again. But it's looking like it's getting to a place where it would want to bounce. But we'd want to see some retrials down in this area. And we can be patient and wait for pool. Second option on that is we didn't get really a blowout volume to the downside when it broke through its 50. So, you know, we could trade this as now a downtrending stock, and definitely just take, you know, just any pullbacks up into the 50 or the 8 or the 20 as potentials to get short the stock. Question about PayPal. Bob, I've been looking at PayPal. I like PayPal. But PayPal itself, newer entity, of course, but it's been around a long time. We use the services of PayPal. You know, it's got support down here at 36.34. That's where you're potentially, if you're looking to get long the stock, that's where you'd be looking to get long. It ran up this past week into resistance that starts at about 39 and then moves up from there. But it is, you know, I'd be definitely worth keeping an eye on, but this is a big down day. Nice move off this hammer off the Keltner channels, and it moved up to the top of the Keltner channel. And will the 8 and the 20 and the 50, nice cluster of moving averages to provide its support. But at this time, along with the rest of the market, it would need to be proving itself. So, oh, one more. Vuzi. Okay, Judy, what does Vuzi do? I love the name. And it's Vuzic Corporation. Again, how old is this company? Okay, I just got really kind of active here back in 2014. So again, I would be wanting to run the stock checkup on it. It is a low value stock, but you know, if it pushes up above the $10 level, it may become a very interesting stock. You've got okay volume, average volume sitting at about a little bit over 700,000 per day. You had a nice climb off of $7, and so the one thing I will say about it, it puts in nice pattern. Okay, involving glasses for, oh, like 3D glasses or something like that for new technology with gaming, virtual reality? Virtual reality glasses. Okay, and one last stock. You know, it's really interesting. Sometimes you can find a stock like this I'm going to write that down so I don't forget it. Do some more checking on it. You can run into a stock like that and and it could wind up being the next big thing. You never know, but it's really definitely worth doing some checkouts, because sometimes you can pick up that $10 stock, and if it runs to, you know, $35, $40, $50, you're in on the ground floor of it. I would also be wanting to take a look at that on a monthly chart, Judy. And so, Eric, did we go over ACPN? It looks awful familiar. Okay, thanks a lot. Okay, guys, I'm going to call it a day and get ready for the Bay Area Money Makers tomorrow. Thank you so much for joining us. It's nice to be back at a home base, and I'll look forward to bringing additional, well, getting back to the regular schedule for our Friday webinars and our Wednesday nights and the whole 9 yards. So have a great weekend. God bless everybody.